Cancel health insurance, obtain a premium refund. Sarah did a great job of putting these together, and I was looking at them today and thinking how, yeah, cancel health insurance, do all that. But I was thinking, geez, that premium refund, I don't always think of the premium refund, but really in all these insurances, if you're health insurance, you may have a premium refund that's available, and it's the obligation of the executor. If you're canceling an auto insurance, if you're canceling executrix or administratrix to obtain that premium refund. As we said before, you want to continue. If you're the executor and all of a sudden a $400,000 or $800,000 or $1 million home burned down and you didn't check on the insurance.
Good idea. You can calculate an estimate of your inheritance tax and outstanding debts. There's still more that will trickle in, but if you have you want to make sure that you have liquid assets in order to cover the debts, and also to make the discount payment to the Department of Revenue at 3 months. You get a 5% discount. You don't have to file the return at 3 months. You only have to make a payment of the tax, and then you'll get a credit when you file the actual return at 9 months. Which 5%, you're not getting a 5% return on your money these days in any savings accounts, so that's pretty good. All of the assets, and this really has to do more with securities. It's called the alternate value. In case the market has taken a wild swing, 6-month value to use on your death tax return. But that's only the federal government, not the Pennsylvania. And then at 9 months, all the returns are due. For federal, it's called a Form 706, and for Pennsylvania, it's called a Form 1500. And the returns are due on that date with all tax being paid to your siblings. And that includes step siblings as well, if you have step siblings. And then 15% for all others, cousins, friends.
Live-in partners. So if, just last week I was doing estate planning for a couple that was not live all their lives as if they were married, and they had no interest in getting married. Whether that interest spiked at all after we went through these rates, I'm not sure, because the if they got married when the first one died, the second one would inherit everything. They were giving everything to each other, death tax free in Pennsylvania. And their estate was worth about $500,000. So 15% of $500,000 is about, what's that, about $75,000? That sound right? So, you could buy a pretty nice wedding for $75,000. So I think after I told them that, I think they're rethinking maybe getting themselves a preacher. And just the federal estate tax rate is, when you get above that $2 million level, you're going to be about 45%. So certainly the techniques we've talked about in other seminars, such as the credit shelter trust, the disclaimer trust, life insurance trust, gifting, charitable donations, all those things are things that you have to be thinking about in terms of planning your estate and trying to avoid federal estate tax. Some of the other tasks that have to be taken into real estate tax. Some of the other tasks that have to be taken into account. The decedent, when the Lord took that decedent, owed income tax, unless you die, I guess, at 1201 on January 1st. I don't know, would you still owe tax? I don't know. It depends on whether you've gotten any income in that time. But if the decedent got enough income, and most people do if they, live even a couple months, you're going to get over that income tax threshold. And so you've got to pay. The estate is responsible to make sure that the decedent's final lifetime income tax returns are paid by the due date. You can get extensions, obviously, if necessary, but those final lifetime 1040 and PA 40 have to be filed. Prepare and file estate income tax returns. Remember we said how the estate is like a person. It doesn't have legs, but in the eyes of the law, it's a person. Well, if the estate is generating income, and remember Sarah was talking about, return on the money that you get while it's invested, and you have an obligation to try to get a return on it for the benefit of the beneficiaries of the estate, but that return is also going to be subject to income tax. The state and federal government are going to expect that the estate itself pay income tax returns, and for as long as the estate is generating income, which is an incentive to get the thing wrapped up in 1 year so that you don't have to file estate tax returns in more than 1 year. Because the longer the estate lingers and the longer it's getting interest, the more likely it is to have to file those tax returns in subsequent years.